Hi, it's Dean Gallagher again. I'm humbled, extremely happy, and very excited because of the tremendous response that you guys gave to my first video that features the 5 exit heroes. I couldn't imagine so many people would be so interested in the contents, and I mean there's 549 phone calls, 2,037 emails from people that are literally going bonkers to get more content. And I really can't disappoint all these people now, can I? So here I am with the second installment of our free training series. And this will be a really exciting video because in the next 2 videos in our series, I'll take you through 2 entire powerful trading strategies in detail, which will easily put your trading profit into overdrive and fast forward you to total financial independence. So I want you to take out a piece of paper and a pen, and I want you to note down all the important stuff because the information I'm about to give you in the next few minutes will completely change the way you think about Forex trading. Before we start touching today's core content, let me ask you an important question. Think carefully before you answer. What do you think are the 2 main reasons that 90% of traders fail in the long run? Now let's take 3 seconds and really think about the answer as it is pivotal to your success. 3, 2, 1. Time's up. Okay, here's the answer. The first reason is that many trading strategies are specifically designed to work in certain market conditions and therefore tend to strongly underperform in specific market environments. And that the retail traders fail to recognize which condition the markets are in and adjust their strategy accordingly. The second reason is not utilizing proper money management. It's great to have multiple trading strategies, each one specifically developed to function in a certain marketing, and to have the ability to discern what market scenario we are in. But it's not enough. Possessing and implementing a proper, logical money management model is the key. And that's why Dr. Van Tharp, one of the most renowned trading coaches in the world, and I, independently, have developed multiple working money management models. The most powerful model among these is my P+3X model, which I'll explain and cover in our coming webinar. So if you haven't registered for our webinar, my suggestion is to go to www.sublimeforexchampions.com/webinar and reserve your seat right away. What exactly does P+3X stand for, by the way? Its name actually illustrates exactly what this does for you. Protection plus 3 times profit. Firstly, it focuses on capital preservation. Just like one of my great mentors, multimillionaire master trader Richard Dennis said, you have to minimize your losses and try to preserve capital for those very few instances where you can make a lot in a very short period of time. What you can't afford to do is throw away your capital on suboptimal trades. And then, and only then, the model looks to triple your profit potential on almost any given trade. I was intrigued but not surprised when I studied a research by my colleague Jack Schwager in which he interviewed some of the world's top traders and investors. Practically all of them talked about the importance of money management. Here are a few sample quotes. Risk management is the most important thing to be well understood. Undertrade, undertrade, undertrade is my second piece of advice. Whatever you think your position ought to be, cut it at least in half. Bruce Kovner. Never risk more than 1% of your total equity in one trade. By risking 1%, I am indifferent to any individual trade. Keeping your risk small and constant is absolutely critical. Larry Height. There is not one particular method of analyzing the markets, nor one sole buy-sell strategy that could account for how these super traders could be so prosperous. However, one common trait in their approach towards the markets was their ability to manage risk. Earlier during their career, some of them had completely or almost lost their trading capital. The one thing separating these future market wizards from other losers was their ability to learn from their mistakes by analyzing the risks they had taken to develop and launch strategies for never letting themselves get stuck in the loss trap again. Anyway, I hope that I've done my job in conveying to you the importance of utilizing proper money management, or as Van Tharp called it, proper position sizing. We'll talk about it a lot more in our webinar, and I'll also show you how our proprietary P+3X model is fused with every trading system that we teach you in our Sublime Champion training program. On the webinar, you'll see and then understand exactly how this money management model blends in every fabric of our training systems. Nothing is left to chance, and you don't need to even think about position sizing constantly, because it's already built into the rules and cross-bred with the custom indicators we provide inside our multiple Sublime Champion proprietary trading systems. Moving on, just a reminder, if you haven't watched the first video yet, you can always click the video 1 link above to watch it. And if you haven't downloaded the 5 Exit Heroes PDF, then please do so and read the PDF prior to watching the rest of this video. So now, let's just dive right into the main content of this video, introducing the trend riding strategy. When it comes to trading Forex, one term you'll often hear is the trend is your friend. Put simply, the price of any currency pair can only move in one of 3 directions, up, down, or sideways. In most cases, the price will begin to move up or down and continue on the same path until something changes that price movement. This is known as a trend. Trading with those trends is an easy way to win more trades and in general succeed with Forex. Currency prices tend to move in one direction or another for a long period of time. This is known as a trend. Simply knowing that prices will tend to trend in one direction or another for any length of time gives you an easy way to capitalize on that knowledge by jumping on the trend. Of course, there are many different ways to trade the trends, and in this guide, we want to help you get started. We'll be covering the different types of trends, how trends may differ with time frames, and we'll cover 2 ways to chart those trends and trade them well. The key to profiting from Forex is to simply find a system that allows you to win more trades than you lose. By the time you're done here, you'll be ready to jump on any trend and turn it into a profit more often than not. Types and times with trends. Before we begin talking about how to trade the trends, we need to cover a few ideas that matter. One of the most important things that you'll need to learn is that trends do not always agree across different time frames on the charts. To trade any trend system well, you need to get used to the idea of looking at more than just one chart. For example, if you're trading the Euro USD on the daily chart, possibly the currency pair looks like it's on an uptrend. In fact, it looks like it's been moving up for the past week. With that simple fact, you might choose to just jump on the trend and profit from the trade. In all likelihood, you'd win anyway. However, with a little more information, you could increase the chances of walking away with a profit. And you'll enable yourself to know more about when to enter and how to manage that trade. Before any trade based on a trend system, you should know what the trends are on the short-term charts, the medium-term charts, and the long-term charts. You should also know where the major support resistance levels are on all of those charts as well. To clarify this, take a look at the following 2 snippets of the current USD-CHF pair. If you look to the daily chart, it clearly shows the currency pair in a downtrend. On a 15-minute chart taken the same day at exactly the same time, the pair seems to be in an uptrend. This difference is important to note as you begin looking at trading with the trends. It isn't that you would trade a 15-minute chart if you were a trend trader. You wouldn't. The charts are way too volatile at that time frame, and the trends aren't established. But by knowing that there will be differences on different time frame charts, you can look at the bigger picture before making a trading decision. At the very least, you should be looking at one time frame longer and one time frame shorter than the time frame of the chart that you're trading. Let's further simplify this by dividing the trends into 3 different types. Long-term trend. First, there is the long-term trend. This is the primary trend that may have a lifespan ranging from between 8 months to 2 years. These are the longer-term, well-established trends that last a long time compared to the others. Traders who trend with these trends will usually trade the daily, weekly, or monthly charts. Any trade made off the long-term trend alone is a trade that is expected to last for a long time and requires large stops and a larger amount of capital. In most cases, traders will trade the mid- or short-term trends. But you should still be aware of what the long-term trend is. Mid-term trend. Within the long-term trends, you'll find many intermediary mid-term trends. These trends can last anywhere between a month and 8 months and are clearly shown by all the up and down trends within the longer-term trend. Mid-term trends will be most apparent on the daily and weekly charts. If you trade the mid-term trend, you are known as a position trader, and you should expect to hold your trades for up to 8 months at a time. Short-term trend. Within the mid-term trends are the shorter-term trends. These smaller trends are temporary movements in price, either up or down or sideways within the larger trends. A short-term trend can last anywhere from a few days up to a month. These trends are affected more by the global happenings that drive the current Forex prices, such as news, trade volumes, etc., and they will be most apparent on the 1-hour, 4-hour, and even daily charts. If you trade these trends, you are a day trader, and you're mostly in trades for 1 day and up to 1 month. Up, down, and sideways. The next idea that we need to cover when we're talking about trend trading is the type of trends. There are 3 basic types: uptrends, downtrends, sideways trends. There are 3 different ways any currency pair may trend. An uptrend is shown when